What is going on, traders? Welcome back to the Traveling Trader. In this video, I'm going to be giving you my top seven. How many are there? 1, 2, 3, 4, 5. Yes. In this video, I'm going to be giving you my top 7 stocks, 7 penny stocks that is, to buy on the dip. As you guys know or may not know, if you guys were hiding under a rock or maybe you were stuck at work all day, there was a little bit of a market dip today, same as yesterday, and we will likely see some sort of pullback and correction coming up soon. Nobody can tell you when, including me, but that doesn't mean that we have to stop trading. When we see good opportunities, we still take them. And I believe that these 7 penny stocks have dipped and are now at a major support level where we can relatively safely buy them, obviously position size accordingly, because you don't want to blow your wad on just these 7 penny stocks. You want your portfolio to contain mostly quality stocks that you buy on the dip, and then leave some room for more risky trades like penny stocks or some swing trades. But anyway, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading. Some of these stocks, some of you have actually been waiting to get in on the dip. I've spoken about some of these stocks before, and they just ran up so hot at the time that I spoke about them that a lot of you didn't get an opportunity to enter them. Well, some of these are now at major support levels where, like I said, you can enter relatively safely. And if you want access to all of my trades, all of my portfolios, link is in the description below. Sign up. We have a group of over 4,400 traders now, which is just amazing. And I really can't believe it every time I verbalize the number. I mean, we started from nothing, really. So without further ado, let's get right into it. The top 7 penny stocks to buy on the dip. Obviously, these aren't the only 7, but this video can't be hours long, so I have to condense it. All right, stock number 1, the ticker symbol TSMP, or Tesoro Enterprises / Humble. And Tesoro is the company that's taking Humble public. Humble being the new fintech company. It has an array of service offerings, but the biggest one is mobile pay, sort of like a Venmo, where you can pay anybody in the entire world, really, with the click of a button. They also have this blockchain-based financial instrument, and they call these ETXs, which are block exchange traded indexes, basically like ETFs that are on the blockchain, or related to digital assets, I should say. And the way that the Seeking Alpha article describes it says Humble offers the combined services of SoFi, Robinhood, Crypto ETX, Venmo, and Square. And based on a methodology that I won't go into in detail, I can link the article below. You can look at it yourself. But they are valuing each Humble customer at $500 per active user. That means, which is pretty conservative according to this article, that means that you would only need 10 million active users to justify its current valuation. I think currently it's the second largest OTC stock at the moment, and they are banking on the success and growth of digital wallets globally, which they want to really corner that part of the market. I mean, we have PayPal, we have Venmo, but they really want to focus on the digital wallet thing. And they are already entrenched in a few major geographies around the world: India, Pan Asia, Mexico, Latin America, Africa, and some other foreign governments. And we see here on this chart just the growth of digital wallets globally. Obviously, as cash becomes more and more obsolete, it's taking off. Anyway, that is the first stock on my list. It is currently sitting at the famed 21 EMA at around 78.5 cents. This was actually almost $2 just a few days ago. So I'm relishing the opportunity to buy Humble, or in other words, TSNP, which is taking Humble public. I would relish the opportunity to buy it here at the 21 EMA. It does look like it is dipping a little bit below the 21 EMA, and the MACD is crossing bearish, so we could see it even retest the 50 MA at around 44 cents, in which case I would likely average down and buy some more for the long term, because I only expect a market correction if and when it does happen. I don't expect us to go into a full-on bear market. I did a whole video on why that is. I'll link it here. All right, stock number 2 is one that a lot of dip buyers wanted a chance to get their hands on, and that is ABML, American Battery Metals Corporation. I've talked about this one ad nauseum. I think I did 2 or 3 videos on this one before, but let's get into it. What do I like about ABML here? Well, just a quick overview. American Battery Metals Corporation does exploration, mining, extraction, and recycling of battery metals, which are a main focus in EVs, obviously. They did an offering in December. They closed another round of financing in January. So things are looking good from a cash flow raising perspective, right? They're raising enough cash in order to expand, and they are well suited for the ongoing EV expansion. So let us take a look at ABML's chart. And as you know, the 21 EMA, once again, the last time that we got into this was back in mid-January. I think it was January 15th when it broke out of the bull flag here. That's when I did a video on it. I think it was like around $1.16, $1.17. And it broke out and hit almost, well, went over $5. We are now sitting at $3.30 at the 21 EMA. And again, I would relish the opportunity to buy ABML here. We do have that bearish crossover in the MACD. The RSI does look like it's trending down. This is not because of ABML. This is because of the market as a whole. So, you know, you can either wait or continue to buy the dips. I mean, in this case, nobody knows if there's going to be a correction. We do have to take a look at some other metrics, which I did outline in that video I talked about, where I go over the crash and what I would look for to determine if a crash is up ahead or not. But if you're looking to buy the dip on valuable penny stocks, then the 21 EMA represents a good opportunity to start a position, and then you can average down as time goes on if we fall down to the 50 moving average or below. However, unless you believe that companies like ABML or TSMP or any one of these other stocks, unless you believe that they will no longer have a run up ever and they won't meet their previous highs, then in my view, investors and traders should be buying the dips on these types of opportunities. Again, not saying it's not going to go down further. The market as a whole is looking red. This is not a problem with ABML or with TSMP, but a rising tide lifts all boats, and the same thing happens once the tide starts to wane. All right, stock number 3, SIRC, or Solar Integrated Roofing Corporation. We bought this one on the dip. This one actually had a 23%, one of the few stocks that was up today. It had a 23% rally today. But the reason that I like SIRC is because it's trying to win on two fronts. Obviously, not only as a solar roofing company, which the name indicates, but they are entering the EV charging game. Now, I don't know what the barriers to entry are there. I mean, this is still a baby industry. Like, I don't know what hurdles they need to overcome in order to really penetrate that market, that young market, and whether they can actually do it or not. But just based on hype and momentum alone, the fact that it has EV charging attached to its name now, along with its famed solar roofing business, I like the company as a momentum stock. Right here, it's at the 21 EMA. Again, like I said, it had a 23% day today. Its stock price is $1.63, coming down from a high of over $3. But as a momentum EV charging play and solar roofing play, I really like it at this retracement of almost half of its value. All right, stock number 4 on the list is one that you guys are familiar with, AITX, or Artificial Intelligence Technology Solutions. This is the one that wholly owns RAD, or robotic assistance devices. And I talked about this, I think, in the last penny stocks video. So I'm not going to relitigate all of the DD, but they basically own a company that is securing a lot of public contracts for their robotic and automated devices. And it currently trades at around 20 cents because it fell to the 21 EMA again. I mean, this seems like magic, but you could see here, for those of you that are new to TA, you always hear me talk about the 21 exponential moving average, and you could see that all of these stocks literally sit on the 21 EMA. Now, obviously, it doesn't mean that it can't go below that, but that is a first line of defense. So I do like to keep exploiting those 21 EMA retraces on stocks that I'm bullish on and on momentum stocks until it is no longer there and the market conditions don't exist anymore. Then I might rethink my position. So we made around 191% on this. Like I said, it did retrace all the way from 27 cents down to 20 cents. I'm bullish on this long term. You can obviously just buy and hold. You don't have to jump in and out, but the 21 EMA to me provides a good first entry opportunity for AITX. And I just want to say in general, the way that I play these market conditions, these frothy market conditions, I do set stop limits on all of my risky holdings, and that includes penny stocks. And I set stop limits where I otherwise normally wouldn't, right? Like there are times when I just buy a penny stock at a support level and I just really wait it out. I give the trade time to breathe and I don't set an SL there. But these are frothy market conditions. I mean, I would not be surprised if, we did see a 5 to 10% retracement, but I'm a big believer in trading the market until the market proves to you that it does want to fall into correction territory, because there's a lot of missed gains by people, and people that I know personally, who have been sitting out of the market for months and in some cases years. And that fear is what causes you not to invest or trade where you can otherwise trade, and then set these stop gaps or these safety measures in order to help you if the stock does end up retracing. I would much rather trade and then end up getting stopped out, and then, you know, some of those signs that I talked about in my previous market crash video, if those indicate to me like the market is going to crash, then okay, fine, I will sit out. But until then, I'm not going to stop trading. I will just modify my trades just a little bit, maybe be a little more stingy about taking profits, a little more strict with setting stop limits. All right, stock number 5 on the list is probably the stock that I'm most bullish on other than ABML, and this is Alpine 4 Technologies. The ticker symbol is ALPP. This one, again, is at the 21 EMA, where we did buy last time when it was $2 and change, and I've talked about this one before as well ad nauseum, so I won't go into the full DD, but this aims to be the largest American drone company and the largest drone company that is publicly traded since DJI, the Chinese company, was delisted. They also own a number of other businesses in construction and automotive industries, etc. But ALPP is one that I am definitely bullish on, and I do think will be double digits by the end of the year. Happy to see it retrace to the 21 EMA where I can start a position here. Or if you are more prudent, you can wait a few days to see if we do actually find support on any of these, not just ALPP. And if we do find support or we do fall through the 21 EMA, you can wait a few days. Obviously, you might be giving up a few percentage points in profit, but you can wait if you were more prudent. Okay, stock number 6 is one that I talked about before, is ORTX, Orchard Therapeutics. This one has almost hit the double digits before retracing again to that 21 EMA. Like I said, this will seem like magic. You do see the potential golden cross here between the 50 and the 200 moving average. This is bullish. However, the MACD does look a little bit bearish, which is fine. Now, ORTX did have FDA clearance for one of their drugs back in November, and they are waiting on FDA clearance on another drug, as well as they have earnings coming up, and the inside scoop is that they will beat earnings expectations. So if we can get a double whammy of an earnings beat plus maybe not FDA clearance, because those things do take time. I mean, that would be a perfect case scenario, but at least more of a status update on the FDA clearance situation, we could see another run up back to 9 and hopefully test $10. It is currently trading at $7.50. All right, and the last stock on the list is ASTI, or Ascent Solar Technologies. I've gone over this company before again, but this company designs, manufactures, and sells photovoltaic, integrated consumer electronics, and portable power applications for commercial and military uses. It offers outdoor solar chargers, solar modules, and other solar-related products. But this company is currently, I really like the momentum of this company. I mean, it's trading at 3.5 cents, but again, currently at the 21 EMA after forming these hills on its way up. This is really just one solid trend line. And remember, trend is your friend until the end. So until this trend here is broken, I'm going to keep trading ASTI in the same way, where we buy it off the 21 EMA after it's had a 3 or 4 day run up, set a trailing stop and exit when you're happy with the profits, buy again at the 21 EMA. So right now it has hit a buy point for us. But just like some of the other stocks that I covered on this list, because of the market conditions themselves and not the stocks individually, we are seeing some bearish indicators on the momentum indicators. However, that's not going to stop me from trading, even if I'm trading at a reduced position, than I normally would. I still want to take advantage of these dips, because trying to call out a crash prematurely is an exercise in futility. Anyway, traders, that is it for this video. I will be talking about Palantir. That might be the next video, because Palantir's lockup expiration officially ends on Friday, February 19th. And in my view, there's going to be some really bullish activity on Palantir, and we already set ourselves up for that by selling puts, etc., and incorporating a few other strategies. Again, if you want access to all of our trades, link is in the description below. Let me know in the comment section which one of these stocks you're interested in buying on the dip, or maybe none of them. If you agree with me, disagree with me, let me know in the comment section below. Hit that thumbs up if you get anything out of this video. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.